As of the market close on August 7, 2026, Ondas Inc. trades at $8.75 per share, down $0.14 or 1.63% for the session, with the stock moving between an intraday high of $9.14 and a low of $8.58 on a trading volume of roughly 45 million shares. While retail forums on platforms like Robinhood stock trading and various investing sites are filled with traders expecting another explosive tech rally, the cold reality on institutional order books tells a far more complicated story. Most market participants look at Ondas Inc. and see a high-flying ticker that surged from its 52-week low of $3.09 up toward its 52-week high of $15.28. They assume that a company sitting at the intersection of counter-drone technology and government defense contracts should automatically print money for shareholders. However, if you look beneath the surface of the recent price action, you discover a deep tension between public market expectations and fundamental operational execution. Investors using self-investing strategies through an individual brokerage or executing trades via the Interactive Brokers trading platform are often drawn to the dramatic daily price swings, but smart capital is paying close attention to liquidity pressures, dilution risks, and heavy cash burn. Over the past several weeks, trading activity in Ondas Inc. stock has seen massive volume surges, with average daily volume hovering around 71 million shares. This high turnover rate indicates that retail momentum and short-term traders are constantly cycling in and out of the asset, while large wealth management desks on platforms like Fidelity Wealth Management and Schwab Intelligent Portfolios are taking a more cautious stance. When a stock experiences daily swings exceeding 5% in either direction, it creates a psychological illusion that a massive breakout is right around the corner. The market consensus suggests that recent defense contract awards, such as strategic collaboration with defense prime contractors and long-range autonomous delivery systems for military research labs, will instantly transform the bottom line. Yet the immediate reality reflected in the financials reveals an upcoming earnings report where analysts project a loss of 6 cents per share. This gap between headline hype and quarterly balance sheet realities is exactly where retail traders get caught off guard. If you examine recent institutional filings across major brokers like Fidelity Investments, SoFi Active Investing, and Interactive Brokers accounts, you notice a clear pattern. Institutional managers are not simply buying shares because of headlines, they are hedging their positions using derivatives and option strategies. When retail traders log into their Robinhood app or SoFi Invest platform to purchase fractional shares during a morning spike, institutional traders are often supplying liquidity on the sell side. This dynamics explains why rallies toward the $9 level repeatedly face strong resistance, short-term trading volume spikes near key technical hurdles only for profit-taking to drag the equity back toward its baseline support. Investors seeking online investment advice or checking an intelligent portfolio platform need to understand that high-volume consolidation near $8.75 represents a critical battleground where bulls and bears are aggressively competing for direction. Macroeconomic pressures also play a massive role in how the market values high-growth defense technology companies like Ondas Inc. In an environment where interest rates remain sensitive to broader inflation metrics, capital allocation toward non-profitable tech stocks becomes far more strict. When retail traders discuss NVIDIA stock, Tesla stock, or Apple stock on popular trading platforms, they are talking about massive balance sheets with trillions in capital and reliable cash flow. By contrast, small-cap defense innovators depend heavily on equity offerings, debt markets, or contract prepayments to fund ongoing product development and aggressive corporate acquisitions. When debt costs rise or equity markets tighten, companies that burn cash face an elevated cost of capital. This distinction is critical for anyone managing their own investments through a Fidelity brokerage account or using SoFi stocks for wealth accumulation. Let us look closely at what Ondas Inc. actually does beneath the market speculation. The company operates through two main business segments, Ondas Networks and Ondas Autonomous Systems. Ondas Networks provides proprietary software-defined radio technology, known as FullMAX, designed to establish private wide-area wireless broadband networks for critical infrastructure operators like Class 1 railroads, electric utilities, and energy producers. Meanwhile, Ondas Autonomous Systems develops and markets automated drone-in-a-box solutions and counter-unmanned aerial systems aimed at defense, homeland security, and government applications. Recent acquisitions, including high-tech defense firms specializing in autonomous effectors and persistent intelligence platforms, have expanded their total addressable market. On paper, this positions the business to capitalize on growing global defense spending. However, the historical financial performance shows that turning technical innovation into sustainable net profit is a long and expensive process. Past earnings statements highlight consistent revenue expansion alongside persistent operating losses, driven by heavy investments in engineering talent, regulatory approvals, and manufacturing scale. For investors using online investing tools or researching through Fidelity IRAs or Fidelity mutual funds, this ongoing cash burn means that future share dilution remains a constant factor. When a firm expands rapidly through acquisitions, it often issues new equity or takes on debt to fund those deals. While the acquisitions increase total potential revenue, they also spread existing equity across a larger pool of shares, which can limit near-term price gains for existing stockholders. Take a moment right now and comment below with how many shares of Ondas Inc. you currently hold in your portfolio, or tell me if you prefer holding mega-cap tech stocks like Nvidia stock instead. Engaging with these questions helps clarify where retail sentiment truly stands compared to institutional positioning. Looking ahead at future catalysts, the primary expectation among retail investors is that upcoming earnings announcements will trigger a major upward re-rating. The market narrative assumes that as new military contracts convert into recognized quarterly revenue, profit margins will rapidly improve, but the reality depends entirely on execution speed and operating leverage. Defense procurement schedules are notoriously slow and subject to government budget delays, regulatory reviews, and supply chain bottlenecks. If contract execution takes longer than Wall Street anticipates, short-term traders using platforms like SoFi Invest, Robinhood Cash Management, or Interactive Brokers account tools may lose patience, leading to sharp pullbacks. Conversely, the opportunity side of the equation rests on the expanding demand for automated security and counter-drone defense infrastructure. As global security threats evolve, governments and private industrial operators are pouring resources into automated surveillance and threat mitigation systems. Ondas Inc. holds key regulatory permissions for automated beyond visual of line-of-sight drone operations without on-site human operators, giving them a distinct competitive edge over legacy providers. If management can successfully integrate its recent defense acquisitions while maintaining strict cost controls, the company could bridge the gap between current operating losses and long-term profitability. When analyzing this stock through an individual brokerage or evaluating it via a Fidelity mobile app or Robinhood fractional shares feature, you must weigh the high upside potential against the substantial financial risks. The market expects immediate exponential growth, but the reality is a multi-year effort requiring disciplined execution, capital management, and steady contract wins. Investors seeking self-investing success must look past headline excitement and closely evaluate quarterly gross margins, cash burn rates, and organic contract execution. In summary, Ondas Inc. presents a classic case study in the tension between market expectations and fundamental reality. While public enthusiasm is fueled by strategic defense wins and cutting-edge autonomous technology, the market reality is defined by short-term trading volatility, elevated volume, and an ongoing march toward sustained profitability. Understanding this gap gives serious investors the depth and clarity needed to navigate the stock intelligently across any trading platform.